A very good afternoon and warm welcome to all the students present today to attend the online lecture. I, Professor Shaurya Shah, hold an immense pleasure to begin the SY Semester 3 session with the subject of financial management. I would have been glad to conduct a classroom lecture with one-on-one interaction, but as you all know and are aware that due to current pandemic situation, we have to study through different online platforms. So I hope that you all will be very much attentive and regular for your online lectures also. Now I would like to begin the session particularly with the subject of financial management. As it is a new subject for you all, in the previous year you have not studied such a subject, but I can say that you are very much familiar if you have studied the accounts subject properly in your first year BBA. Financial management is a subject related particularly to management of finance. Now I would like to start the session with particularly the syllabus and the contents in it. As I think that it is a new subject for you all, it is very much essential for all of you to know what is the subject all about and what are the chapters included, right? So to begin with, the subject particularly, entire subject is based upon this icebreaker quote, and it's not about having lots of money, but it is knowing how to manage, right? A person becomes rich as soon as he gets more money, but to get more money he has to manage his funds, he has to manage his finance, and he has to manage his money. So all these things, managing the entire finance and funds, requires the subject of financial management, which we are going to do for your entire semester. So what is the main objective of the subject, and what is the main purpose for inserting this subject in your curriculum? The main objective is to make students know about the techniques of financial management and their applications for business decision making. Any business, any institution, any trust, you all as know, finance is the lifeblood of that entire system. Without finance, no business activity can proceed further. Even without finance, nobody can even survive in today's time period. So to make students aware about such kind of techniques and their decision making applications, this subject is particularly designed. I hope now you must be clear with the objective of the financial management subject. Okay, so now we'll be moving forward to the syllabus of the subject. But before that, I would like all of you to think for a while. What do you mean by finance? In everyday life, we use the term finance. There is a shortage of finance. There is, again, we can say availability of finance, from where we can get the finance, from where we can invest our finance. But what is finance? Now, many of the students must be thinking, and in our layman's language, finance is equals to availability of money. We think that our money is our finance, but it is a very vast subject. Finance is a broader term compared to money. Now, what do you mean by finance? In basic language, if I can say, finance is the art and science of managing the money, right? Money is only an instrument, an element through which we do the transaction. But to manage that thing is known as finance. As I said earlier, finance is the lifeblood of business. No business, I repeat, no business can ever survive without finance. Even for starting a business, you need finance. Even for closing down the business, you need finance, right? So there is a huge difference between a finance and money. I hope this much background is clear to all the students. Okay. we'll be proceeding further to the syllabus of your particular semester. Basically, you have in all 4 chapters in your syllabus of semester 3. We will be going through each chapter one by one and having an overall idea, and I'll be giving you simultaneously meaning of certain terms for that particular chapter. Okay, I hope it is clear to each and every student. Fine. Now, dear students, the very first chapter in your syllabus is related to your introduction to financial management. As I said, it is completely new subject for you all people. Being a management student, you should know that what do you mean by financial management. It is a kind of introductory chapter for giving you an overview of what you are going to study in your entire semester. Fine. This chapter or unit particularly consists of 25% of weightage. Now, in that, you will first study meaning and nature of financial management. What is the meaning and what is the nature? What are the characteristics, features of financial management? I hope being a management student, you have studied what do you mean by management. In simple terms, if I can say, management is managing the things. Maybe it human resource, maybe it finance, maybe it your marketing. So we are into the field of financial management. So here you will study the meaning and nature of it. Again, finance and related disciplines, that are the fields related to financial management. Financial management itself is a very vast field, includes other fields also. And what are the scope of financial management that you have to study? Moving ahead, the goals of financial management. You must be thinking, why we should do financial management, right? So any financial management has mainly 2 broad goals, or we can say 2 major objectives. The first, you all are aware, profit maximization. Second is wealth maximization. Now, profit maximization, the term profit, you all are aware. Any business is working for profit. The basic aim for any business is to earn profit. The second is wealth maximization. Now, in today's time period, only profit maximization is not enough. Mind well, students, with profit maximization, wealth maximization is also very, very necessary. At this point, you all must be aware of Reliance Industries Limited and their company Jio Telecom. In the recent days only, during the lockdown period, they have cracked deal for selling their shares and gathering the income from them. You all must have read across through internet, across through newspapers, that is particularly wealth maximization. The total capital, the total wealth of the company is increasing. Fine. Again, there are traditional approaches and modern approaches. What is that? We will particularly study in that particular chapter. Next is your functions of finance. Now, any finance is having 3 major functions. The first is finance decision. Second is investment decision. Third is dividend and liquidity decision. It is a together heading finance decision. Basically, finance decision includes from where you are going to get your finance. And investment decision includes after getting those finance, where you are going to invest those finance so that you can get the goals of profit maximization also and wealth maximization also. Dividend decision. This is the entire 3rd chapter. When we will be studying, we will be going through that particular thing. Again, liquidity decision going in 3rd chapter. Then there is one person. We always use the term manager. Who is a manager? A manager is a person who manages the things, who performs the functions of management. So here also, who performs the functions of financial management is known as a person called financial manager. The most important person in financial department. We'll be studying the various roles, functions by finance manager. Apart from that, there is a concept called time value of money. and why people value money today. Majority of the persons, if you ask what is the main objective in their life, is to earn more money. And what is the value of money? If I could ask you a simple question, is the value of 100 rupees same as it was years back? I can say 20 years back, 30 years back, or 40 years back. You must be very much aware that the prices of the commodities or the products is increasing day by day. Can I purchase the same quantity of money or service in 100 rupees years back and today? The answer is no. The value of money is increasing and the purchasing power of the people is increasing. Due to that, the value of money is affected. So why people value very much today and the concept of time value of money simultaneously you need to study. Then the concept of present value, future value, lump sum, simple, annuity and growing annuity, each and every technical term we are going to study in the particular chapter. I hope every student is clear with the first unit, what you need to study, what are the concepts. Okay. Moving on to the second chapter. Second chapter is related to your long-term investment decisions. Now, long-term investment decisions means once you have procured the finance from various sources. In your accountancy, last year you must have studied various sources of financing. It may be share capital, it may be your borrowed capital, and it may be any kind of funds from bank loans or any kind of funds you are borrowing from the market. So when you are borrowing such kind of funds, there is a cost of capital. So taking a long-term investment decision is very, very vital in business. In this particular chapter, the weightage is 30%. This long-term decisions are majority done in capital-intensive project. Now, there are two things, revenue and capital. When you are taking the term capital, it is always for longer period of time and it is much more in amount compared to your revenue expenditure. So in order to calculate the capital budgeting, you need to study what do you mean by capital budgeting, the nature, meaning, principles and techniques of capital budgeting. So you need to study and estimate the relevant cash flows and terminal value also. So what do you mean by, first of all, capital budgeting? You all must be aware of the term called budgeting. Our union minister also gives the budget every year for the entire country. So when you are studying capital budgeting, any capital projects, you need to first prepare the budget for them. How much cost will be involved, how much revenue will be involved, and then you are taking into account capital budgeting. There are various evaluation techniques for that also. This is completely a practical chapter, including the theory for each and every method. Those evaluation techniques include your accounting rate of return, net present value, internal rate of return, net terminal value, profitability index method, and payback period. Each and every method you need to study in which area it is used, their advantages, limitations, and how it is computed. This chapter, again, I can say a very, very interesting chapter. You need to know the concepts and then you need to calculate the actual value for making a long-term investment decision. I hope it is clear to every student. Fine. Now, before I move on to the next chapter, my next lecture will be particularly related to your key technical terms only. The entire semester, what you are going to study, we will be discussing first the terms. It will include your budgeting, it will include your dividend, what do you mean by capital. So first, if you are clear with all the terms, then the learning becomes very, very easy. Okay, the next chapter is your dividend policy and leverage. The dividend policy and leverage chapter is related particularly to the returns which you are providing to the various stakeholders. Now, as you all know, you can borrow the money from capital, that is your owner's fund, equity capital, preference capital. You can borrow your money from outsiders, that is debentures. You can borrow money from banks. You can take bonds. So you need to pay a fixed return to those stakeholders. Now, what do you mean by dividend first of all? Everyone must have heard this term, 10% dividend, 15% dividend. What is the meaning of that? Dividend is the return which the company is paying to the shareholders for investing their money in the company. So every year, either quarterly, either 6 monthly, either yearly, company has to pay dividend to them. In the second part of the chapter is your leverage. Now, what do you mean by leverage? Leverage is the ability and the policy to borrow money from outsiders to invest in the company. Okay. What is the chapter all about? It is having a weightage of around 20%. Very first thing you need to study is the relevance and irrelevance of dividends. Now, there are around 4 models you need to study. That is general model and hypothesis for irrelevance of dividends. Second is your Walters model and Gordon's model for relevance of dividends. So there are 2 major heads that you need to study. That is it relevant to give dividends or is it irrelevant to give dividends? What are the major implications of this model that you are going to study particularly? Then the next is your types of dividend dates. Types of dividend dates includes your X date, U date, announcement date. As you all know, on a particular date, a company declares the dividend first. Once the company declares the dividend, then the dividend is issued and dividend is paid to the shareholder. So what are these 3 dates? We'll be studying it in detail in particular chapter. Then the second is overview on effect of dividend announcement on stock prices. As you all know, our economy is a global economy. It includes every trader and every investor from across the globe. We are having Sensex, that is on Bombay Stock Exchange. We are having NSE, Nifty 50. We are having various kind of stocks, prices for any company. If I ask you as a management student, you all must be aware regarding the financial status of the country. If I ask any of the shares prices, listed, unlisted, of any company, today you can find very easily on your internet or with the help of various mediums. So when a company declares the dividend, what is the effect on the stock prices? It fluctuates each and every day. So declaration of dividend also either increase or decrease the stock prices of the company. What is the effect of it? We are going to study. Leverage analysis. Leverage, as I told you, is the policy or system through which you borrow the money from various lenders. There are main 2 types of leverage. One is operating leverage. The second is financial leverage. Main 2 heads. Combining both of them is known as combining leverage. Right? There is combined leverage, we can say in short. So taking into account the benefits of operating leverage, taking into account the benefits of financial leverage, a company can implement a combined leverage. So we will be studying each and everything in detail in particularly the chapter. I hope every student is clear with the previous 3 chapters syllabus. Fine. Moving on to the 4th chapter and the last chapter of your syllabus, that is working capital, cash and receivables management. This chapter is particularly having a weightage of 25%. Dividing it into 3 parts, the entire chapter goes through your 3 lineups. The first is your working capital management. Second is your cash flow management. And the third is accounts and receivables management. Now, very quickly, if I tell you to think for a while, what do you mean by working capital? Working capital, is it related anything to capital working? How the capital works? No, students. Working capital as you all majority must have thought correctly, related to your day-to-day capital requirements to work in routine day-to-day activities. How much capital is required? You all must be aware of a term called current assets, of a term called current liabilities. So if I ask you, current assets minus current liability gives me the working capital. How much do I require? Managing that working capital is also a part and a scope of financial management. In that, you need to study, first of all, what do you mean by working capital? What are the factors that affect working capital? Operating cycle, cash cycle, and determination of working capital requirement. If I ask you, if I have a business where very much cash is required, so I need to very precisely plan my working capital requirement because I need cash on hand very much every day. If my business is such that daily cash requirements are less, so I can plan accordingly for my working capital. So what are the factors of it? What is operating cycle, cash cycle, determination of working capital requirement? We will be doing it. The second part of that chapter is your management of cash, the most important thing in any business. Even in your day-to-day life, you are managing the cash. You are getting certain money to spend again to require for investment, and in business you are getting constant cash inflow and you are doing constant payment, that is cash outflow. So how to manage that particular cash? You need to prepare a cash budget. In your home also, certain money you are getting for household expenses, you are preparing a budget for. Even in country also, government is preparing budget for your revenues and for your expenses. You need to study how are the receipts and payments managed in a particular business and the cash management technique for it. I hope every student is a cash manager right from your childhood. You must be getting pocket money, maybe any amount of rupees, but out of that pocket money, you save certain amount. You pay for your expenses. You again invest certain amount. So all the students, you all know all these things which we are going to study, but it is just in terms of technical terms, right? So from the very beginning in Indian culture, in our family, we are known the value of money. Our parents, our grandparents have told us stories regarding their money investment, again regarding their finance, their time, the value of money was very high. So all these things just wrapping up in particularly chapter. The third and the last part of the chapter is your receivables management. Now, receivables here, you must be knowing a term called bills receivable, accounts receivable. If you are paying certain money to people, the money which you are going to receive from the debtors, you are selling right now, but you are going to receive money after 10 days, 15 days, 20 days, or say 30 days. So that particularly related to receivables management here. What are the objectives of it? What is the credit policy, cash discount, debtors outstanding, and aging analysis, cost collection, cost capital, capital cost, that is default cost, and delinquency. So all those costs, various types, you need to study in this particular chapter. The main thing here is your credit policy, cash discount, immediately. Many a times you must have seen that when you pay the cash immediately, the trader or the businessman gives you additional discount. That is your cash discount. Why? Because he is getting the cash early compared to your bills receivable. So the benefit he is transferring to you. All those things are related particularly to your unit 4. I hope everyone must now be clear with the syllabus, what you are going to study. I believe strongly that half beginning is half done. We have now begin with the syllabus. So you all are brush up with the concepts and we are going to do it. In the next lecture of mine, I'll be going through with first all the technical terms of your syllabus. You must be clear with the concept. Then we'll be moving on to the chapters. Now, this subject particularly will be shared by me and Pujan sir. Pujan sir will be taking your first chapter and your fourth chapter. I'll be taking your second chapter and third chapter. So from next lecture onwards, I'll be starting first with the technical terms. You all will be cleared with that part. Then moving ahead, we'll be starting with your second chapter. That is your long-term investment decisions. I hope every student is clear with the syllabus part particularly. Okay. Now, one more thing for you all students. Now, when it is a completely theory chapters, first of all, now when we'll be going through the theory, there will be some practical sums. As very honestly telling you people, as it is the very first year of your syllabus. Now, university has implemented this syllabus for the very first time in your academic year 2020-21. So as such, we'll be starting with the theory part first, completing the theory, then related sums, as in when the clarification comes, the subject will become very clear. So we'll be going through the theory first, and then we'll be starting with the practical sums in each and every chapter. Moreover, I'll be providing you notes. As such, the reference book, I'll also give you in the next lecture which reference book, if it is available. Majority of the material will be provided by me in your Google Classroom. So you need to continuously attend the lectures related to that particular lecture. I'll be providing you the notes in Google Classroom. So you need to download those PDF, you need to practice it, and again go thoroughly through each and every concept twice, so that you will be clear, and again your new subject which is having, you will be grasping it very fast. Again, the subject is very interesting, related to your day-to-day life, related to your day-to-day business, and you can evidently see each and every concept in country's economy also. My every lecture will be followed up with the practical example, maybe related to any company, maybe related to any country, maybe related to any business case study, so that along with theory, you can relate it with the practical world also. Because I strongly believe that the knowledge which you are getting it, if it is not related to your practical thing, then I suppose that knowledge is little less useful. So with this, I request each and every student that you will attend the lectures regularly and actively, so that it is beneficial to enhance your knowledge. I hope everyone must be again clear with that. Any doubts, any queries, you can ask in Google Classroom. We will be immediately replying you and solving your queries. I hope everyone must have gained some knowledge out of this particular lecture, and next lecture onwards we'll be continuing with your actual second chapter, that is your long-term investment decisions and technical terms. With this, I thank each and every student for investing your time. As we are in the subject of financial management, your time management is also very important. You have invested your valuable time, you should get a valuable return outcome. Again, taking a leave of all of you. Thank you every student, and we'll be meeting soon in the next lecture. Thank you everyone.